Welcome back. After nearly 8 years of home prices steadily rising across the country, CoreLogic reports that home appreciation rates have slowed for the 12th month in a row. According to their report, home values grew by 3.7% between March 2018 and 19. Those living on the West Coast are seeing the most significant pullback in home values. Not surprising, considering those markets had the fastest appreciation rates. While housing market may be cooling, we are not entering a housing bubble. And of course, that's good news, but there could be good news for reverse mortgage originators as well. Slowing home prices can actually reduce, in fact they do, the amount of money that is loaned to the homeowner up front. And that reduces the risk of a claim when the loan ultimately terminates. In other news, Reverse Mortgage Daily is reporting that RMS, or Reverse Mortgage Solutions, may be on the auction block. The financial woes of RMS's parent company have been well documented in recent years, but a recent court filing entered into the Southern District Court of New York just in April. It approves the sale of most, if not all, of Ditech's assets. RMD does note, while not being specifically mentioned in the court filing, their sources report that indeed RMS is one of the assets to be auctioned. And in our next story, the reverse mortgage market is evolving for the first time in a decade as the industry pivots to address sagging sales and what it sees as a new opportunity presented by the number of baby boomers retiring. So begins a recent column in investmentnews.com. Now, the columnist does point to HECM lenders' innovation as overall sales volume is faltering, but more specifically, that in the wake of the monumental changes of October 2017. If there's an additional $8,000 to $10,000 to close on the loan, that's sticker shock, said Jamie Hopkins in the column. Hopkins is the Director of Retirement Research and the Vice President of Private Client Services at the Carson Group. It's a large amount. It feels very expensive. And that's what we're hearing from loan officers. It's a big problem. As lenders are grappling with the higher cost of the HECM and also reduced loan proceeds, many are debuting alternatives to the federally insured reverse mortgage. And in our last story, don't miss our upcoming exclusive interview with Karen Hill, formerly of HUD, on our upcoming podcast, HECM World Weekly. You can click on the podcast button above to join our discussion on her new role with an industry task force and also her take on recent HECM reforms. Leave your comments below and also share this video with others using the social media links found on this page. Have a great week.